Thank you for joining us once again. This is Dwayne Ortega from BestTransactionFunding.com on another segment on quick tips for flips. I have Vena Jones-Cox today as our guest. Welcome, Vena. Thank you again for joining us.
Thank you.
Just wanted to find out some more information regarding the wholesale world around the country. I guess give us what you think is happening currently and what you foresee over the next year.
Well, it's been an interesting market for the last year. It's been an interesting market for the last 6 years, and obviously we had the giant crash of the finance market, crash of the real estate market, market flooded with good deals, market flooded with foreclosures, and then over time they got absorbed. And in the last 12 to 18 months, the wholesalers and other real estate entrepreneurs I've talked to have been complaining about a lack of inventory. They're seeing that a lot of bank-owned properties aren't even getting into MLS. There are certainly less of them because foreclosure rates have dropped enormously. A lot of that huge bubble of foreclosures that happened right at the beginning of the recession have been absorbed in some way now, and bank-owned inventory is way down, and that's making overall inventory that's in MLS and openly on the market much smaller than it has been in the past. And I think although the market has cooled some now, if you look at nationwide numbers since spring of 2014, number of sales is down, prices have flattened out. Part of that is because, so part of the reason sales are down is there's just not as much for sale. There's certainly a lot more people looking for deals than there were a couple of years ago. But the prices are starting to flatten out, largely because interest rates are creeping up, and there was just an announcement today that the Fed's going to raise rates again, and that will tend to sort of keep prices down a little bit. And a lot of the big hedge funds that were huge players in the market that were buying up thousands of rental properties in some cities have pulled back from that. Some of them entirely, some of them have cut back from literally 100 properties a month in particular areas down to 15 properties a month in particular areas. The prices have been driven up to the point where return-driven investments don't make sense anymore. If you're collecting money from people and saying we can promise you this certain minimum return that's much better than what you can get other investments, and you can't get the return anymore because the prices are up and the rents aren't, you have to pull back from buying. It just doesn't, the numbers don't make sense anymore. Now a lot of them are moving into other fields. Some of them are private lending. Some of them have opened up funding sources for people with big portfolios of rentals and things like that. Some of them have moved into other classes, other asset classes. Some of them are doing apartment buildings now as opposed to single family homes. But unless prices drop again, or rents go up significantly, or their cost of funds goes down, I think that they are probably going to continue, at least for the next year or two, to sort of be out of the market. Now there's a question about what's the next step for the funds. There was a lot of theorizing at the beginning of this that they would buy until prices went up and then they would sell, and there would be this huge flood of houses on the market. That does not appear to be happening. What is happening instead is that there's a consolidation going on, where instead of the big funds buying houses, the big funds are buying little funds, or buying the properties of the little funds. So there is a consolidation going on, and there will probably be fewer of those funds around 5 years from now than there are today. But they did have a big effect on both the speed of the market and the price of the market in areas where they were buying, and they were buying in most cities, but they were buying in sort of the mid-low end of most cities. So the luxury properties were never affected by this. But of course, as wholesalers, your customers and my students, we were never in the luxury market anyway, so it hasn't had a lot of effect on us.
So how does I guess stagnating prices, or rising and stagnating prices, hedge funds not buying as much anymore, and interest rates going up, how does that affect the wholesaler?
Well, the fact that simultaneously there is less inventory on the market, and that rates might be going up, could balance each other somewhat. I mean, I don't really expect another drop in price. I expect us to get to more of what I would call a normal market, where prices go up a little bit every year, as opposed to swinging by 10% up, 20% down like we've seen in years past. And I frankly am looking forward to that. I would like to see a year where houses were worth about the same at the end of the year that they were at the beginning of the year, maybe a little bit more, you know.
Right.
So you know, the thing with trained wholesalers anyway, ones who don't just like go out and focus on one kind of property, and then when that property type dries up, they don't know what to do. We know that there's always demand amongst buyers, and there's always motivated sellers. And so when the MLS inventory dries up, which it has largely, we go out and market to people who don't have their properties in MLS. And when all the properties that could be bought, fixed, and sold are selling too fast and for too much money, if they're distressed, we go out and look for rental properties that are distressed and sell to landlords for a while. So it's really for wholesalers who are serious about the business, who aren't just, you know, trying to make a quick buck and get in and get out. We just keep tracking the market, and we go where the buyers are there, but they're not so anxious to be buying that they are out competing us for price on that kind of property.
I see. So you have different strategies for different cycles.
Yes.
Of wholesaling markets.
Yeah, we do.
Okay. So how will wholesalers fare over the next year? If it's in a normal state, will they still have as many deals as they can handle, or
if they will market for them?
Okay.
That's going to be the key right there. It's no longer possible just to get all of your deals from MLS and agents and Craigslist and things like that. You need to be actively out there telling people you buy houses, and you need to be marketing to estates and people who have ugly vacant houses. And you know, I know a lot of people who use bandit signs or car signs to get calls from people who their house isn't on the market, but they do want to sell it. And that's right. That is a normal market. In a normal market, that's what we do, is we market. Now, the question about how wholesalers will fare is an interesting one, because there's been a huge explosion in about the last 12 to 18 months of people running around calling themselves wholesalers who don't actually seem to fully understand what their business is or what their product is. And that is partly the fault of the education industry. And when I say education industry, I mean the folks who are out there teaching the weekend seminars. They come out of town and they do a thing that they put together. It's not with your RIA group. It's just, you know, you got this free invitation. And unfortunately, some of what they are teaching is not good for a long-term career in wholesaling. Some of what they are teaching is very much, you are in it for the quick buck. You shouldn't worry about, are your buyers getting a good deal? In fact, you should find buyers who don't know whether they're getting a good deal or not. You should put properties under contract that you know you can't sell, so that you can go back and renegotiate with the seller later. And all of that stuff, although it sounds good, it sounds like a great hustle and a great way to make money, it has unfortunately been drawing some regulatory attention to wholesalers. I mean, when people feel like they're injured, buyers or sellers, and they start complaining to their elected officials or their regulators, it's obviously going to draw attention to that industry, and we have way too much of that going on right now. And so when I answer the question, how are wholesalers going to fare? What I mean is, how are wholesalers who are serious about their business, who are doing it right, who are treating people right, who have the right forms and contracts, who do everything very legally, and you know, all the I's are dotted and the T's are crossed. I'm going to say there's always investor buyers out there who want to make money, and if you'll leave it on the table for them, they're always willing to buy. Okay,
so as long as they have the right strategy and the right cycles and have the best practices.
Exactly, best practices is so important.
Okay, and how can our audience find out more information of what the best practices are in wholesaling and the current events of wholesaling today? How can they find out through you?
Well, they can go to my website. It's regoddess.com. That's RE like real estate, goddess.com. I've got some free articles up there. I've got about 200 free podcasts there on the site from my radio show. And they can get information about where I'll be speaking and different events that I'm doing as well. And they can sign up also for my free weekly e-letter, which is always an article of interest to real estate investors. And I sort of try and keep people in the loop, not only in terms of like what the best practices are, but also of what is going on in the wholesaling world.
That is truly helpful. I'm one of the subscribers to Vena's website, and it's a wealth of information, and the podcasts are invaluable to your library. Well, thank you again. I'll have to end it here. Thank you, Vena, for again spending some time with us. on our segment for quick tips for flips. And I'll talk to you soon. Take care. Bye-bye.